What's up guys, it's Humphrey. In one of my previous videos, I actually detailed exactly what was in my Roth IRA, which included a multitude of ETFs, including VOO, VTI, VEU, and BNDW. My allocation is pretty textbook for what I've invested in. It's actually what most financial advisors would recommend because I used to be a financial advisor myself. So I'm always looking for capital preservation and a little bit of upside because one, I really just don't like losing money. My Roth IRA was also created at a time when bonds were still producing a decent enough return. Now that's not the case anymore. So after I released that video on January 1st of this year, I actually was forced to do some introspection. I recently sold off some of the bonds in my portfolio of my Roth IRA, and I allocated those funds instead to the S&P 500 ETF that I already had, which was VOO. I also realized that some of you watching this video have more of an appetite for risk. So what I'm gonna do in this video is go over the wide array of investments that are available out there, categorize them by level of risk, and give you all my thoughts on each of those investments. That way, depending on what type of risk level you have some options available to invest in, especially when it comes to your Roth IRA, which comes with many beneficial tax advantages such as tax-free gains. The way I see it is that if you pick too safe an investment, you're actually underinvesting in the Roth IRA, and so that's actually going to be detrimental, especially if you're on the side of a younger investor. If you don't know how a Roth IRA exactly works or you want to be a little bit more refreshed on those details, you can check out my video from January 1st. I'll link it in the description below as well as right up here. Before getting into all the types of different investments and their risk levels, what we need to actually figure out is what our personal investment risk tolerance is and our time horizon. Now, with a Roth IRA, the time horizon piece is pretty much figured out because you're going to be investing for retirement, but the risk level part can still be assessed. By figuring out your risk level, you can basically figure out what types of investments that you're going to be more inclined to invest in. So the more conservative you are, the more conservative of investment you probably want that's a little bit less volatile, and the more risky you are, the more to the moon you probably want to shoot for. An easy way to assess your risk tolerance as an investor online is just to take a questionnaire, and there are tons of questionnaires available online, but I'll link one that I really like in the description below, and that one's from Vanguard.com. So let's go over the first category of investments, and these are going to be the least risky type of investments for your Roth IRA. Now, if you already know that you're someone that's a little bit riskier, I'll leave timestamps in the description below, and feel free to skip around the video, but if you do want to watch this video from start to finish, it'll actually be just a good refresher for you as well. So let's go over some of the investments that are least riskiest. That's going to be cash, treasury bills, and also bonds, but more specifically high grade bonds. Now these investments aren't risky at all, but that also might mean they might not come with much return. In fact, sometimes even zero return in the case of cash. Most of you guys will probably not be investing in these in your Roth IRA, but I figured it would be good to just go over them really quickly. So in terms of cash, that's something you don't want to be in your Roth IRA. A lot of people will deposit money into their Roth IRA, but then forget to invest it. So they'll just be sitting in cash, but cash is going to lose its purchasing power over time, so you do not want to be in cash. The second least risky investment are treasury bills. Now, treasury bills, or T-bills as they're known, are backed by the US government, so they have virtually zero risk of default unless the US government completely collapses, of course, but hopefully that doesn't happen. Now, as a return basis, they only pay about 0.16%, and that's for a 52-week treasury bill. Now, 0.16%, that's not great at all. You can probably get a higher yield just from a high yield savings account that's online. Now, in terms of a Roth IRA, we probably aren't going to be seeing treasury bills in anybody's Roth IRA unless you're maybe closer to the age of 60 and you want to just hold something other than cash. The third type of investment that I would categorize as least risky are actually bonds. So bonds are IOUs from governments or corporations, and most high grade bonds right now are relatively safe, but the returns just aren't there. So typically they return between 0 and 3%. So those are some of the investments that were considered least risky, but now we're going to get into the medium risk stuff, which is probably why you came to this video. So let's get into that. The first type of investment that is in the medium risk level of category that I would consider adding to your Roth IRA are actually individual stocks, more specifically large cap individual stocks. Now, chances are large cap stocks can also be dividend paying stocks, and dividend paying stocks are actually quite nice to hold in a Roth IRA because the dividends that are going to be normally taxed are not going to be eligible to be taxed because they're in a Roth IRA where your gains are all tax-free. I would say depending on the type of individual stock, especially if it's a large dividend paying stock, these could actually be considered more safe in the spectrum of the medium risk level of category. So investments in a Roth IRA are well suited for things that are tax inefficient. So for example, real estate. So that's actually our next investment that we're going to talk about today is REITs. So real estate investment trusts, as they're known, are actually investments that you can invest into that pay out or they're legally required to pay out 90% of their income as dividends to you. Having REITs in your Roth IRA is actually a pretty good option because of the dividends that are compounding. They're going to be growing tax-free within that Roth IRA, so that's always a good thing for your REITs. I will say though, if you do own a total stock market index fund such as VOO or VTI, those actually might have some of those REITs already included in them. So if you are buying REITs separately in your Roth IRA, that's definitely something to consider. You don't want too much of an overlapping asset. That actually brings us to our next investment in the medium risk level tier, and those are ETFs and target date funds. ETFs and target date funds are like baskets of stocks. So instead of buying 500 stocks individually, you can just buy one fund that encompasses all those 500 into one investment, and that actually makes investing in a large variety of stocks quite simple. It's going to offer you a lot of diversification, and especially if you're the more passive type of investor, an ETF is perfect for you because it's going to track, let's say, an index or a sector and give you a lot of that upside without too much management. For example, the S&P 500 ETF VOO, which is very popular, historically returns about 8 to 10% a year, and the expense ratio or the fees on that fund in particular are very, very low. I believe they're 0.03 or 0.05%. Target date funds are similar to ETFs and index funds, but the main difference with a target date fund is that they'll automatically adjust their holdings for you based on your risk tolerance and what year it is. So as you near the date of the target date fund, they'll actually get more and more conservative as time goes on. The last type of investment I'd like to talk about in terms of the medium risk level today is actually mutual funds. So mutual funds are similar to ETFs and index funds, but the main difference with a mutual fund is that it actually has an active fund manager. So it actually has a portfolio manager. That fund manager is involved in a lot of the selection of what stocks go into that mutual fund, and their aim is to beat the market, although not all the time do they actually beat the market. As a result, however, mutual funds typically have higher expense ratios or higher fees per year. So the average expense ratio of a mutual fund, I believe, is at least 0.8%, if not even closer to 1 or 1.2%. You can put mutual funds in your Roth IRA, no problem. However, just know that the mutual funds, if they do have a higher fee or higher expense ratio, that's going to be compounding over a certain period of time. And if you're investing for a retirement, those fees could actually eat into your return. Now let's get into some of the higher risk investment options available to you in your Roth IRA. Now, personally, I don't invest in any of these high risk options. However, I wanted to at least point them out for you guys in case you guys do have that appetite for risk I was talking about. One of the best things about having a risky investment in your Roth IRA is that you could capture a lot of gains, especially in the first, let's say, 5 or 10 years that you have your Roth IRA, and then eventually you can roll those gains into more safer investments down the line for your retirement. And because of the Roth IRA's tax-free nature, it actually pays off pretty well if you are able to actually roll those gains into safer investments later on, because you're not paying a ton of capital gains on those crazy gains. The first investment that I would consider high risk are actually growth stocks. So growth stocks are just individual stocks. They're pretty much small or mid-cap companies, and they're just looking to grow as quick as they can. The smaller a company is, the more risky it's going to be. That's because they haven't had a proven track record yet. Many of them aren't even profitable. Many of them are just relying on top-line revenue to grow year over year. A small cap company is by definition one that has a market cap of between $300 million to $2 billion, and they're basically really small companies poised for growth, but as a result, they're more volatile. A mid-cap company, on the other hand, has a market capitalization of $2 billion to $10 billion. They're a little bit more seasoned than your small cap companies, but they're still growing in that growth phase, and there's still a lot of potential for upside. So one strategy in your Roth IRA is just to invest in a few different growth stocks that you have a really high conviction in. So let's just say, for example, you really believe in the future of medicinal mushrooms. I have some friends that are really into medicinal mushrooms, and as a result, they've looked up some different companies in that space. With growth stocks, there are many different strategies you can pursue out there and many different companies you can look at. So when it comes to growth stocks, just be really careful and just make sure you do your due diligence before you invest, let's say, your entire Roth IRA into just one single growth stock that might rely on an industry that's not proven out yet, such as medicinal mushrooms. The next type of high risk investment that you can get into are actually high growth ETFs that are actively managed. So the first one that comes to mind is like ticker symbol ARKK, the ARK Innovation type of ETFs. Since these ETFs are actively managed, they have a really high expense ratio, 0.75% in fact on the ARKK, and it's much more volatile than your traditional S&P 500 ETF. but it seeks to get long-term growth through their fund choices. ARK is frequently covered in the news due to its crazy amount of gains, but that's not without its volatility as well. Just looking at the performance of ARKK, we can actually see that year to date, it's actually down about 3 to 4%, but in the past year, it's up over 175%. That's a pretty wide range and pretty risky if you ask me. The next type of high risk investment that you could get into are actually cryptocurrency ETFs. You can invest in crypto ETFs such as ticker symbol BITW or GDLC. Now let's take a look at Bitwise or BITW. This holds a collection of the 10 most highly valued cryptocurrencies weighted by market capitalization, and in the past year, it's returned about 139%. Since inception, it's actually returned over 491%, which is pretty crazy. Of course, your returns are going to be tied to how well the cryptocurrency market does. So if the cryptocurrency market all of a sudden tanks, then your investment goes down with the ship. Another high risk investment are crypto derivatives. So for example, GBTC is a type of derivative that you can buy on the financial markets through an ETF, but it basically tracks the price of Bitcoin. So this option allows you to get exposure into Bitcoin through a traditional means. So through your Roth IRA or your taxable account, you're able to actually trade on the price of Bitcoin without actually having to own Bitcoin in your Roth IRA. One of the nice things about holding riskier options in a Roth IRA is the fact that since you're investing for retirement, it actually might discourage you from selling too early. So it actually encourages diamond handing or holding for a very long period of time and to ride out any of those volatile waves. If you have the risk tolerance for it, one of the nice things about investing in riskier options is what I mentioned earlier, which is all of a sudden you can get a bunch of gains and then you can roll those gains into more dividend producing or maybe safer investments so that you actually take advantage of compounding even further. Let me know what you guys think in the comments of these different types of investments. Obviously, I didn't cover every type of investment out there, but I did want to give you a good canvas of what is out there. All right, guys, I hope that was helpful. Make sure to like the video if you enjoyed it, subscribe to my channel if you haven't already, and tick the notification bell so that you can get notified whenever I drop a video. If you'd like a free stock valued up to $200 whenever you deposit $1 just into Robinhood, you can use a link in my description below for that. I would appreciate that as well. And thanks to my Patreon supporters, I appreciate you being here. If you'd like to see what I buy and sell on a regular basis, as well as get access to my portfolio, you can do so by supporting the Patreon with the link down below. All right, guys, I will see you guys in the next video. I hope you enjoyed. Peace.